Hi viewers, Namaste. In this video, we will learn about double top and double bottom chart patterns, how to identify them, how to confirm them, and of course, how to trade them. So, welcome to the world of Get Trading. To explain in simple words, in an uptrend and at a strong resistance area, if we get a single rejection itself, we will tempt shorting opportunities. Adding to it, if there is another rejection at the same place after a pullback, what will you do? We will increase our probability for shorting, right? If this is seen as a chart pattern, then this is first top and this the second top. That's the reason this pattern is called as double top chart pattern. This shape is looking like alphabet M, right? So this is the reason it is also called as M formation. Similarly, in a downtrend and at a strong support area, a single rejection is treated as buying opportunity. Additional to this, if there is another rejection at the same area, then due to the additional confirmation, we can be more probable of a trend reversal, that is downtrend to uptrend, right? As this pattern has two bottoms at the same area, the pattern is called as double bottom pattern. As it is looking like alphabet W, this formation is also called as W formation. So far so good with identification part. Now, let's check the textbook rules as to how to confirm these patterns. Let us check with daily candles. Now, in an uptrend and at a previous strong resistance point, if at all there is a rejection and after a pullback, if at all price retests the same line and falls from there are more chances of a trend reversal, that is uptrend to downtrend. So, this is a reversal pattern, right? Now, to the textbook rules of double top pattern. This pullback should be at least 10% of the price. Next, we consider these 2 points on the same line, right? But in actuals, there can be 2 to 3% deviation too. Yes, it is acceptable. Now, if at all anyone got a doubt that why can't this lead to a channel, horizontal channel? If anyone got this doubt, you are a genius. So, that is the reason we draw a neckline at the low of the swing. If at all the price crosses this neckline, then we can confirm this as a double top chart pattern and predict a trend reversal, that is uptrend to downtrend from that point. Same ditto with double bottom too. One more rule which is applicable to both the patterns is the space between two bottoms or the tops in general should be 1 month to 3 months. If it is more than 6 months or so, then the pattern might not have much impact. So, for short-term investments and swing traders, this double top and double bottom patterns are of perfect use. Let's check on charts. First, double tops. Let's check in daily charts of Axis Bank. Before confirming a double top pattern, you need to check whether there is a proper resistance point at that level or not. See, there is a double top at considerable resistance level, but neckline has not been broken. So we cannot confirm that it is a double top. Here there is a resistance line and there formed a double top pattern. Let's zoom and see. So in this uptrend there is a pullback which is a longer one, right? Let us measure it. It is close to 27%, so more than 10%. First rule qualified. Next, the price difference between swing highs is almost 2.11%, almost close to 2%. So, second point is also qualified. Next, the time distance between the highs is 108 bars and 60 bars at starting. So, not more than 6 months and at the same time more than 1 month. So, the final rule is also qualified. So now, with more probability, we can anticipate the fall from the neckline area. Draw a neckline and if at all a candle closes outside it, you can take the advantage of the fall in futures or options market. For target, take the height of the top from the neckline and that will be the distance from breakout point. Stop loss, few pips above the swing high, or as discussed in the previous video, volatility based stop loss concept can also be used. So this is the target. This is the entry, right? Let's paint it in green. One more way to take profits is to observe the recent swing lows as they may become supports. Like in this example, if you are satisfied with this profit, you can exit here, or else you need to take care at that level, and if the price crosses there, it's better to keep your stop loss near to that point and safeguard your profits. And the next target point will be the next swing low. Okay, now double bottom chart pattern. See here, there is a good support line and here formed a double bottom pattern too. Let's zoom and see. This pullback is almost like 18%, so more than 10%. Next, time between candles is 73 bars, which is good, and these two bottoms are almost on the same line, almost. So with all this qualifies to be a double bottom chart pattern. We can be prepared to go long but should wait for the price to cross the neckline. Let's paint it in green. In some cases, some traders wait for the price to retest this line again and then will enter after the retest. These traders are called as retracement traders. Of course, they don't get entry all the time, but they are happy with that. It is their trading style. Anyways, for target, measure the depth of the neckline to the bottom, and this distance from the breakout is your target as per rules. Stop loss few pips below the swing low, or else volatility based stop loss, etc. See here, those who doesn't want to place stop loss wider will sometimes place below the swings low. But see here, all these stop losses are hit and then price went up. That is why we say your stop loss should be very wise. This viewers is about double bottoms and double tops. There won't be much stuff more than this, but yes, there will be a concept called Adam and Eve that we will see in some other video. Not satisfied with the content still, right? I know, that's because we have not seen how to use this concept to day trade, intraday trading. We can use some other confluences. In other words, we can increase our probabilities by adding confluences even in the lower time frame. Let us see 15 minutes chart. Double top first. See, here formed a double top pattern, and that too at a considerable resistance. Let's zoom and see. This is the line which connects these two tops, which is resistance. There are many tools which can be used as confluences, especially for intraday, but let us discuss one method in this video. We take a momentum indicator for this. I take my favorite one, RSI. You can take any momentum indicators like MACD, stochastic, etc. You may say that the overbought and oversold regions are of less use nowadays, so why to use it, blah blah blah. But wait, we are not using this for overbought and oversold conditions. Rather, we will be using it to spot divergences. Yes, taking confluence of divergence. You may be aware of regular divergence, hidden divergence, that too bullish and bearish divergences, right? Okay, see here for the divergence between price points and indicator points. By now, we have identified this double top and are looking for bearish signal, but we need some confluence to confirm it, right? Now, this is the confirmation. Price is forming equal high, but indicator is forming lower high, which is nothing but bearish divergence too, which is bearish in nature, right? So, with these confirmations, we will wait for the price to close below the neckline and then can take the short entry. Target. Mark the height of the neckline to the top, and that distance will be the target from the breakout area. Stop loss. Few pips above the top, or else volatility based stop loss. One more issue with intraday is the time constraint, right? Now, see for example, you took an entry today and you're stuck in a pullback and you end up with losses. On the next day, the price respected the pattern and hit the target accordingly. Now see, are you a winner or a loser? Or it is better to say, are you in profits or losses? So, where do you place your take profit, and in fact, do you take entry on the previous day pattern's confirmation is the edge you should have. This you will get from backtesting and live trading itself. The trick here is, if the pattern specified take profit is within the limits of normal days volatility, for example, 10% is the take profit as per the pattern. But on normal days, you may not see that much movement. In these cases, you have a choice either to wait till the day close, like 3 pm for example, and close your trade at whatever price you get. Or check every candle to observe major pullbacks and exit with maximum profits you can have on that day. As said, the decision will depend on your experience. Next, if the previous day pattern has not hit the target to date, and if there is much scope in terms of reward, you can easily enter in the trade today too, with expectation of reaching the target. See, in this particular situation, we have achieved target on the same day, so no problem. One more example with double bottom. We identify the pattern and also took confirmation using the momentum indicator divergence. So, with more probability, we can enter the trade. So, let's draw the neckline. For target, depth of the neckline to the bottom will be the distance of the target from the breakout. Here too, target achieved on the same day, so no problem. Let us check a case where target has not achieved on the same day in which the pattern is formed. See here, double bottom in 15 minutes time frame. These are two bottoms. See here, the indicator is showing bullish divergence. How? Price is forming lower lows but indicator is forming higher lows. So, with more probability, we can be bullish on this script. This is the neckline. Okay, target is depth of the neckline to the bottom, or else let's do one thing. In this particular case, we will make use of swings highs in this case. So, few pips below the swing high is our target. So, if we wait for a candle to close above it, we should have taken long position here itself, and we would have exited on the same day with no profit or little loss too. So, this pattern has not minted you any money on this day. But wait, next day, as you can see, there is much way till the target. So, you can take entry at some place here and can exit at somewhere here with profits. If there is no space for profits, that is, if on the next day, if price is near to the target itself, it is of no use to take the entry from there with less risk to reward ratio. As said before, for entries and take profits in intraday trading, you need to have much skill as time should be your constraint too. This you will get with much practice. So practice and trade well. This viewers is all about double bottom and double top pattern. Let's meet in our next video. Have a happy, safe and profitable trading. Jai Hind.